Hello again, and thanks for coming back. So we actually have 4 more REIT stocks today to go through. I'm going to show you the pros and cons of them all, so go ahead and stay tuned and let's dive into it. Alright, and my little disclaimer I always put out there is obviously do your own research. I'm not recommending any of these stocks, but just want to show you some pros and cons of them and what you want to look at in stocks like this. These REITs are going to be different types of REITs that you can look into, and some have pros and cons. Some are kind of on the rebound, some aren't. So just consider all these different aspects when you're looking at a REIT like this. But let's get into them. I'm going to go through them really quickly, spend about a minute or two in each one. Definitely post your comments and let me know what you guys think. Alright, so the first REIT we're going to look at is Physicians Realty Trust. It's DOC is the stock symbol. It's 1840, the stock quote, and it's got a 5% dividend, which is really high actually for what this stock's all about, because it does have an upside to it. If you look at the chart here really quickly, it's gone from about $11 in 2014 up to about $18.40 right now. So it's got a good obviously upward trend over time, plus that 5% dividend. What these guys specialize in is basically obviously medical buildings, helping physicians, hospitals, and healthcare providers. They tend to say that they got the deepest healthcare knowledge, so obviously you can take that with a grain of salt, but you can look at their website there. It's been up over about 18% this year, up to May 20th. I haven't checked it the last week with this pretty bad stock market so far in 2019, at least this week. Prior to that, it was really good though. And overall though, one of the things that's really important with this stock, and this is a really big thing, is they only have about 3.5% of their leases expiring through 2022. So if you think about that, it's 2019, so for about 3 years only about 3.5% of their leases are expiring for this REIT, and that means basically it should stay fairly stable. Of course, do your own research, don't take my word for it, but obviously just looking at that, it should stay fairly stable. If you go into their website here really quickly, you can see that here's their location of all their different investments of the REITs, the properties that they own and leasing. A lot of it not much on the West Coast, but more on the Midwest and the East Coast. And obviously, if you want to go ahead and visit their website, you can do that. Here's a picture of their website right here, and go ahead and look at this one. It's got some upside to it, I think, but you just have to do some research because these are always going to be risky. All right, so the second one's going to be Ladder Capital. It's the stock symbol is going to be LADR. 1620 is the stock quote. This one actually carries a really high dividend, so you're going to be buying this more primarily for the dividend. It yields about 8.4% annually. As you can see, this is a stock that they recommend that you buy in the dips. So obviously, it had when it started out, it had a very big dip. These little dips here, and obviously there's a dip here. It's maybe going to go down a little bit, and then you should buy on that dip as well. That's what the experts are telling us. But go ahead and take a look at this. They do commercial mortgage. It's a commercial mortgage REIT basically with that high dividend, and they have a cash dividend payout ratio of about 85%. Loans totaling about $3.3 billion, $6 billion in assets. But they do commercial real estate and loans, offering flexible capital solutions. So if you go into their actual presentation really quickly, it's called Ladder Capital. This is on their website. But basically, you can see stock symbol LADR, cycle tested and aligned management team, national direct CRE organization platform. It basically says the dividend here, a 36% dividend increase since initial dividend in Q1 of 2005. And it goes through some a little bit more information on this page. But if you actually come down here, this is where it gets a little bit more interesting. It tells you basically what it actually invests in for its REIT. And it does say it's about $3.5 billion fixed and floating rate senior first mortgage loans secured by commercial real estate properties, $1.6 billion primary investments in commercial mortgage-backed securities, and then about $1.2 billion in owned real estate properties, providing stable recurring cash flows. So you can kind of see what this is all about. Again, buy this one on the dips, not on the upside, obviously. It's a little bit more risky with that big dividend, but go ahead and take a look at it and do some more research on this one for sure. All right, so the third one's going to be Kimco Realty Corp. A lot of people probably know about this one. It's 1730 is the quote. Carries a pretty high dividend at 6 4.47% annually. If you look at this, basically it did take a huge hit here during the recession, basically in 2008, and it's had a little bit of trouble, but it's come up pretty good since then. This one actually had a lot of trouble, basically because of the huge retail building, issue that's going on right now. But what they did is they did some cool things that actually are bringing them back. So basically, they've been up 26% year to date right now, before this week, obviously. And if you look at this, obviously, you can look at their history here. But basically, let me go ahead and go to their website really quickly. But they're basically the largest open air shopping center provider in the United States. So they have about 75 million square feet. Now, obviously, the retail space is not coming back, like it would. Obviously, there's a lot of online sales and things like that. But what they did basically is they rebuilt their entire portfolio, and they're focusing, basically bringing on these really high-end malls, and they're bringing them back only to the most affluent 20 cities in the United States. So they're buying in those 20 affluent cities in those states, and they have a way better quality right now of stuff that they lease out than they used to. So obviously they had a little bit of issues in the past, but the way that they actually restructured is really, really kind of intriguing. Something to look at, because they, obviously they're doing the right things in only the most affluent areas. The other thing that they did is they added 14% basically in grocery stores that they lease out to as well. So during a recession or something like that, that gives them a little bit of a cushion, because those tend to do well in recessions, and it gives them a little bit of a buffer there as well. So go ahead and take a look at this one. It's completely redone their portfolio to focus on some of these rich areas, and I think it's a good idea with these open malls, just in these certain areas. Obviously, most of the United States isn't going to be like this, but these guys might be a good buy. Alrighty, so the fourth one's going to be Mammoth Investment Corp. It's going to be the stock symbol's MNR, and it's 13.91 stock quote. This one carries about almost close to a 4.89% dividend yearly, and this is basically another REIT. And obviously, if you look at this since way back in the early, I guess it's the 80s or 90s here, it's gone up fairly consistently. It looks like it had some trouble here recently, and there were some issues with that. If you look at this stock, some of the history behind it, it was too heavily into one provider. It was leasing out to, I believe it's FDX, but it was too much, and they had some trouble, and it caused them to actually have a big downturn here. But they did restructure some things, and they actually the valuation looks pretty promising right now. It's up 16% year to date, and they trade at a discount, I think, right now. So it's one of the stocks that does trade possibly at a discount, if you're looking to get into that kind of a stock. But anyways, they focus on longer leases and longer tenants, so definitely take a look at this stock. If you look at their website, it says at Mammoth, we specialize in owning high-quality net leased industrial properties on long-term leases to investment-grade tenants. This has enabled us to deliver, reliable and predictable returns to our shareholders throughout the business cycle. But these are the type of buildings, obviously these commercial industrial buildings that you see all the time that are, obviously 600,000 square feet, things like that. So usually those obviously can be leased out depending on the location and things like that. But again, they also restructured. Looks like there's some upside in this stock. Do some more research before you buy anything, but definitely take a look at this one as well, and let me know what you think. Alrighty, thanks for watching, guys. So obviously, like I always say, do your own research on all your stocks. Never buy them just based off of what I say. Just wanted to go ahead. This whole channel is about just exposing people to different stocks and things like that. So go ahead and take a look at these, and then let me know in the comments what you guys think about them as well. Also, if you can subscribe to my channel, I also post technology videos and also travel. So I'll guys see you maybe, I do about 3 weeks, so I'll see you in about a day or two, or I'll see you in a couple days. So bye.